First trading day back for all 18 strategies in the new year. We traded EVP1 in the first 2 trading days, and there was a drawdown. We missed that drawdown. Today we stepped in minus 1,090 on the 250K portfolio, minus 327 on the 50K portfolio, trading 2 micros. The live trading was pretty close really close on the micros. Some extra slippage on the 250K portfolio, minus 1526.50 on the day. And so the drawdown, hypothetical end of day drawdown, is minus 1526. We were at minus 22, around minus 22, minus 2300 on the month. Since we started, we just phased in with EVP1 and then traded today. So those are the results for today on Thursday, January the 5th, third trading day of the week. Monday was a holiday. Tomorrow is non-farms payrolls. And so the market seems like it was waiting for that as well. Let's go over the market and the trades on the day. Market continues to be unnaturally propped up. Just interesting price action, how you see the gap down and opening dump, and then the market just stays there most of the day. You see right in here around, I guess, 1:15 Eastern time, the market was selling off to the lows, and James Bullard came in and said something neutral, which is, he's normally hawkish, so it's considered dovish. Market spiked up on that. When the market was at its low, we were up about plus 1K, and so this little rally here by James Bullard from the Fed, I guess, is felt the need to come out and say something. Market spiked, and then it rolled over again to the lows. So that created some extra volatility in the count. And so it didn't really help anything to come out and say what he said. Didn't come out, the algos jumped onto that and created extra volatility. But overall, just a choppy day ahead of FOMC. Same thing in the, not FOMC, but non-farm payrolls at 7:30. Before the market opens, 1 hour before the market opens tomorrow, you have the jobs Friday. And, just a lot of noise in this market. Some say volatility. It's a very narrow range, though, so it's more noise than volatility. And so the ranges are pretty narrow, around, 25 or 30 points in the S&P. It's pretty narrow, and just a lot of noise. Nothing, just a lot of reversals. You get to catch a lot of reversals by the lows and sell the highs if you can find a way to do that. And, we've had about 8 days of chop in the market. So let's look at that. So on Thursday, December the 22nd, the market sold off. That was a nice day for our strategies. I was traveling on that day. And so gap down, continuation. Even with the reversal, it was a nice day. Since then, they've managed to just create a noisy channel out of it. It's taken the entire range and just stayed there. And so there was really a day where the market was trying to distribute. And so 8 days in a row now of noise after 1 day of trend. The trend to noise ratio is extremely small. And so, you used to see 1 trend day and then 2 to 4 choppy days and then a trendy day. And now we're like seeing one trendy day and 10 choppy days. And so that's what we're seeing right now. And so big time chop right at the lows, though. We're looking at a market that's just sitting on the lows and being propped up. That's really weak technically. Let's look at the daily charts as well. We were looking at the S&P. Now we're looking at the Nasdaq. Similar situation. The Nasdaq is near its June lows or 2022 lows in general. The June lows were back here, and the market mainly traded above those. And now it's sitting right here at these lows and just above the October lows, and it's really weak technically for there not to be more of a bounce. I would anticipate the market to at least come down here before it rallies, if it rallies, and if it comes down here, continue lower as well. And so that's my analysis of the market overall. The reason I bring that up is the framework for which we trade, the opportunities to take long and short trades exist, and so the market has been unusually choppy and unusually wound up to the upside, and so I'm anticipating that cycle of a downside as well, but we'll see if it happens. Either way, we have strategies to take long and short trades. So here was the James Bullard rally right here, stopped out Cobra 3, and then we had mirror at the open. It was stopped out. See if I can decrease the screen here so you can see that. and then want to do that. Let's decrease this and then take a look here. Mirror took this opening trade long, got stopped out, $500 stop loss, 2 contracts, tick fader, took a long trade in here. Thought it would hit its profit target, did not. Tick wave did well in the day. You just see all the noise though. Got short here. Market just chopped around all day and went down here, got out at the right time near the lows. Tick wave was the winner today on the S&P. 1 for 4 on the S&P and 1 for 3 or 1 for 4 on the Nasdaq as well. You see Viper trading. It had one trade here. This was the James Bullard rally. Stopped out there, and then it had 2 winners in a row. Still minus 150 on the day. And then we had AT 2020. Got short. Market popped. It continues to do this pop where you see the market sell off and it runs all the way back, takes out the high, and then it rolls over. And then James Bullard comes out, rallies again, and then it rolls over. So constantly popping this market up and propping it. And here is the tick reversal. Nice short trade. Tick reversal at an equity peak today. So that's good. EVP1 had some extra slippage on that at the time of day. Got long in here on this James Bullard rally. And then the market rolled over, stopped out, then tried to get long here at the end of the day. Scratch trade, extra slippage on that. So really, 1 for 4 on the day on the Nasdaq, 1 for 4 on the S&P, and not bad results. Low winning percentage of days. You'd be right more often than not if you wanted to increase your winning percentage, you would take the exact opposite of my trades, and your winning percentage would be above 50%. But ultimately, our trades are below, winning percentage is below 50%, but net profit is up. And so if you did that, you'd be right most of the time, but you would lose money if you followed the exact opposite of my signals. So also one of the things about doing the opposite of the signals is that some of the strategies have stop losses and no profit targets. And so if you trade a strategy that has stop loss and no profit target, you reverse the signal, you have a profit target with no stop loss. So that's one of the scenarios. If you reverse the signals, consideration is to trade the opposite of my signals when you're at an equity peak, and then trade my signals when you go into a drawdown and start trading the signals. So it's one thing to consider and interesting perspective. So those are the trades on the day. Once again, for January the 5th, 2023, tomorrow is Friday, Jobs Friday. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.